I just closed a 5% winner on NVIDIA in 48 hours while most traders are confused about market direction. And I'm about to show you exactly how institutional volume told me when to enter and when to exit. What's up, traders? If you're new here, my name is Jesper and I teach you how to read institutional money flow using only volume structure. Today it's February the 10th. We've got a fascinating market setup. The S&P holding bullish while the Nasdaq is breaking down. Amazon in a textbook short, Bitcoin bleeding, and ARK setting up for a next leg higher. By the end of this video, you'll understand exactly what institutional traders are doing with their capital right now. And more importantly, how to position alongside them instead of being exit liquidity. Let's get into it. Before we analyze today's setup, let me quickly explain what you are seeing on these charts, because this is not your typical retail trading indicator. This is the institutional volume terminal, and it's built on 4 components that professional traders use to read the market structure. Now, the first one is the VWAP deviation. So VWAP deviation, this tells us how far price is from the average institutional cost basis. You see here the first deviation and the second deviation. When you see up here at plus 3.58%, like on NVIDIA, that means price is trading 3.58% above where the volume weighted average positioning sits. This is critical because institutions, they don't chase, they accumulate on dips and they distribute on rips. Second, the red line here, that's the point of control, also the POC. This horizontal line shows you the price level with the most traded volume. Think of this as institutional headquarters, where the big money establish their positions. On NVIDIA, that's 180 around. Price gravitates to POC like a magnet. Third, the volume profile. These colored zones on the left chart shows you where volume occurred at which prices. The light blue zones are high volume nodes, institutional accumulation or distribution areas. The gaps between the zones, those are air pockets where price moves fast because there's no volume support. This is the terminal's intelligence rating from 0 to 10. Higher scores means multiple factors are aligning: the VWAP, the POC, volume nodes, and swing structure. A score of 5 on NVIDIA told me institutions are crowded here. Time to take profits. Right now it is 3, but yesterday it was 5. But here's what separates professional from retail traders. We don't just read indicators, we combine them into what I call a regime identification. Price above the AWAP, that means bullish regime. Your job is simple: buy the dips, hold strength, and sell into resistance. Price below is a bearish regime. Your job is equally simple: sell rallies, hold weakness, and cover support. The biggest mistake retail traders they make, well, it's buying dips on bearish regimes and shorting rallies in bullish regimes. That's why they lose money. The terminal keeps you on the right side of institutional flow. Now, these labels you see on the chart, strong div and apps, these are volume divergence signals. Strong div means strong divergence, price is making lower lows, but volume is chasing institutional absorption. This is where smart money accumulates while retail panics. The apps means absorption. Institutions are actively buying or selling into emotional retail flow. Notice how the terminal shows strong div here. That's not coincidence, that's institutional distribution. And now, right now, it's trading well beneath the deviation signal that we had. Okay, let's start with the S&P 500. In the last video, I was doing a live trade. On the way down, I was saying that if we got to the AWAP, I would buy. It pierced through the AWAP, and at that time, the structure was bearish, so I didn't take the trade until it crossed up again on the AVAP, and it showed me a 3 confluence score, and so I took the trade. So I took the trade here, and on the screen automatically, the terminal, it shows then 3 targets for the trade. I always divide my targets into 3 and take, when I take profit 33% off at PARK, I automatically move my stop loss to break even. And here's what matters. Price is trading above the AVAP. It has now a 500 bars swing age. That means this bullish regime has been in place for 501 4-hour candles. That's approximately 84 days of sustained institutional support. And look at this in the dashboard called volume profile recalculations. That means institutions established their cost basis around 6,862 and they haven't repositioned. When you see 0 recalculations here, it means conviction. They are not wavering. Now watch the price action closely. Every time it dipped towards the 686 area, the terminal printed a strong deep signal. What's happening here? Institutions are using retail fear to accumulate. When price dips towards the target zone, they step in with size. This creates the volume divergence signals. Price going down, institutional buying going up. And then look what happens every time. Price rebounds strongly. This is textbook regime trading. The strategy here, if you're trading the SPX or the SPY, you are looking to buy dips to the 6860 zone, 6890 zone, not short the rallies, not predict tops, buy dips. That's what the regime tells you. The macro indicator shows coiling here, meaning we are in a compression before the next directional move. But as long as we are above AVAP, the institutional absorption at support, the buyers remain bullish until proven otherwise. And right now I'm in an open trade. My first target is hit, my second target is hit, and I am looking for the last portion of my investment just to let it run. Now here's where it gets interesting. While the S&P is holding bullish structure, look at the Nasdaq. Current price is 25,287. We have a VWAP deviation of minus 35%. The POC is 25,577, and we have a confluence score of 3. So we are getting near towards the AVAP. Let's see if that will follow the SPX positive trading. But here's the smoking gun. Look at the convergence status here. It is diverged with 72%. This means while price is attempting to reclaim the AVAP, the volume structure is showing distribution. Institutions are selling into these strings. And check out the volume composition, expanded with 50%. That's not bullish expansion. That's increased volume occurring while price is below AVAP. That's a distribution volume. So now here's the critical insight for your trading. The S&P right now is bullish. The Nasdaq right now is bearish, but we are getting closer to the AVAP. I'm looking for a rejection of the AVAP. This isn't a market crash, this is a sector rotation. Institutions are moving money out of the growth and tech, represented by the Nasdaq, and into value and cyclicals. This creates a massive opportunity if you understand the game. The strategy here, you don't short the Nasdaq and go long the S&P at the same time. That's just beta neutral noise. Instead, you identify strong names in the S&P that are outperforming while finding weak names in the Nasdaq that are underperforming. Which brings us to the next setup. All right, let me walk you through the NVIDIA trade step by step, because this is a perfect example of regime-based execution. I posted this in my trading community. NVIDIA was in a confirmed bullish regime. Price was above AVAP with 3.58 deviation. The 420 bar swing age told me this wasn't a short-term bounce, this was institutional position. Now, look at the price action down at the 176 level. Price drops to 172, tested twice, and the terminal prints absorption. This is our setup. Price is making lower lows. It comes down to my IVT magnet zone. And volume is showing accumulations. We have these yellow bars here. Institutions, that means that institutions are stepping in. And then it reclaims the POC, and it even reclaims the AVAP at 183 and prints a 3 signal buy. That is our entry. Why 181, 183 and not down here at 172? Because I am not trying to catch the absolute bottom. I'm waiting for institutional confirmation. And the signal here shows me that they are interested in 176 and I wait, of course, to the reclaim of the AVAP. It shows me they are committed above 180. So I enter at 183 with a confidence score at 3. It's a moderate setup, but clean regime structure. And watch what happens. We touched the first target. We touched the second target. And because it's the second deviation, I closed the trade for a 5% gain. That's not about being greedy or anything. This is about understanding that professional sells into strength, not weakness. They sell to the retail FOMO crowd, not to each other. Where did I exit? I exited at when it reached the target here at 193. And the terminal is showing the same signals. The VWAP deviation still 358. Confidence score still elevated. And divergent grade is still weak. This is what happens when institutions, they step aside. Price doesn't crash immediately. It just loses momentum. The buyers dry up. The volume thins out. And eventually price gravitates back to the POC around 180. Will I re-enter NVIDIA? Absolutely. When? When it builds new volume structure. When it consolidates this move. When confidence score drops and the divergence grade improves. When institutions show me they are re-accumulating. But right now, risk reward doesn't support a new entry. This is the discipline that separates consistent profits from emotional trading. Now let's flip it to the short side, because understanding how to short correctly is just as important as buying dips. The Amazon price is currently 208. The VWAP deviation is minus 8.7 and the POC is at 222.60. And the bias is bearish. This is a textbook regime setup. And I want you to see how different the signals are compared to the bullish setup. Look at the price action in December and January. Price is trading in a range bound between 235 to 240. The terminal is printing a number of signals. It says a minus 7, a minus 9, a minus 4, but still trading above the AVAP. And these are distribution signals. Every rally to AVAP gets rejected and every rally gets sold. Then in early February, price breaks down through the POC at 222. This is a regime confirmation. We are now below the AVAP and the point of control. And the entry zone is when I got the signal 4 at 223. And this is a signal where I actually shorted the breakdown. And we have the first target, the second target, and the third target was hit quite nicely. So why not let it run? Because when it reached the second or the third target, there was a strong deviation showing on the chart. And that means, okay, buyers are coming in, so I will not play this short anymore. And the risk here is the macro indicator shows bullish. So there I have on the dashboard an indicator that shows the macro indicators, the macro indices. And it will create a headwind for individual stocks on the short side. Amazon could get lifted by overall market strength even while its individual structure is weak. And position size matters. This isn't a back up the truck short. This is a relative weakness play. Amazon is weak relative to the broader market. And finally, let's look at Bitcoin. We see that Bitcoin had this fallout on the 6th of February on Friday, and it has slowly rallied, currently trading at the bottom of the value area. But this chart tells a story. and I want you to read it with me. Back in late January, Bitcoin is trading around 88 to 89,000. Price is testing the long-term AVAP multiple times and bounces, and it fails here. And then in early February, price breaks down hard. We have a strong distribution pattern, and in matter of days, this is strong deviation candle, and this is not a healthy correction. This is institutional distribution. If we see at the volume composition, it is building 85%. This is huge. This isn't capitulation selling. This isn't panic. This is controlled distribution. Institutions are building positions, meaning they are systematically offloading their Bitcoin holdings into retail buying. When you see building in a bearish regime, it confirms the trend. They are not done selling. And this, for the 62 to the 64, represents a major volume gap in previous accumulation zones. It's where I expect the next absorption signals and potential reversal setup. So that's we did see the near-term bottom at that level. So maybe the bottom is in, but I haven't seen any positive indications that institutions have come in. So I am not touching the Bitcoin trade as it is now. Another chart of interest is the ARK. It's an active long that I just went into yesterday. Current price is 72. We have a bullish bias. We are 3% above VWAP, and we have a confluence score of 3. And this setup started back in early February when price was traded around 66. And look at these signals. These are strong deviations. Multiple of them. Signals in the 66 to 70 zone. Price is making lower lows. Volume showing institutional absorption. This is the same pattern we saw on NVIDIA in the S&P. Then price reclaims the AVAP, established bullish regime structure, and starts climbing. The volume composition expanded to 22%. This is real accumulation, is not low volume drifting. So the entry was in 69 zone on absorption signal, and now here's the position management decision I am facing. So my first target is the POC. When that has been reached, I will move my stop loss to break even, and the next target is 84. Or should I take profit now? That is the question. So here's what I'm thinking about it. The VWAP deviation is 3.15. That is not as extended as NVIDIA. There was 3.58. Not a lot of difference, but we're getting into stretched territory if we are going up here. The confidence score is still 3, so it's moderate. It's not extreme. But the macro indicator shows bullish alignment with the S&P. This support continued strength in growth innovation sectors after the recent washout we had. So my decision is if we go to the POC, I will take 50% off. I will move the stop loss to the high of the IVT magnet zone. And then I will scale out if we even get higher. And this accomplishes two things. Log in 33% gain on half the position. That is money that cannot be taken away from you. And then you still maintain the exposure for potential move to the 84 with zero risk. My stop loss is right now on 70. The stop on the remaining positions, they are adjusted to break even. If prices reverses from here, I will walk away with a 7.5 average gain on the trade. If it continues to the 84, I capture an additional 5% on the remaining half. So this is professional trade management. You don't have to be all in or all out. You can scale based on structure. All right, let's zoom out and talk about what all of this means for your trading strategy going forward. Here's what the terminal is showing us about the institutional money right now. We see accumulation zones. The S&P is at 6,860 to 690. NVIDIA is at 176 to 181. And ARK is at 66 to 72. We are seeing some distribution zones on the Nasdaq, 25.4 to 25.6. The Amazon at Amazon is 235 to 245, and Bitcoin we're seeing a distribution zone on 76 to the 90 level. So notice the pattern. Institutions are rotating out of high beta growth, the Nasdaq, the crypto, and into quality growth with value characteristics. This isn't random. This is a systematic capital reallocation. Now, most traders see this and they think market crash is coming, or Bitcoin going to zero, or tech is dead. And that's not what's happening. That is sector rotation. The market isn't collapsing yet. It's evolving. Money is moving from speculative to selective, from momentum to structure, from retail FOMO to institutional positioning. Your edge is following that flow, not fighting it. So here's your systematic approach going forward. I want you to screenshot this and put it on your trading desk. For bullish regime assets, buy dips to AVAP and POC support. Hold through consolidation above AVAP. Sell into volume resistance with high confidence scores. Never sell short against established bullish regimes. For bearish regime assets, sell rallies to AVAP and POC resistance. Hold shorts through consolidation below AVAP. Cover into volume support with absorption signals, and never buy counter trend without regime shift confirmation. It is that simple. The terminal shows you the regime tells you the action. Your job is to execute and discipline. So right now we have mixed regime conditions, S&P bullish, Nasdaq bearish. This means selective positioning, not broad directional bias. So I'm long quality growth like ARK, while short mega cap tech like Amazon, Bitcoin. And this isn't market timing, this is structural reading. So today we are looking at some critical levels that I'm watching. The regime shift monitors. Nasdaq 100 is the 25577 AVAP reclaim would signal potential regime change. Amazon 2222 POC reclaim invalidates the bearish thesis. And Bitcoin 73,000 reclaim suggests distribution pause. So the high probability setups, it is S&P dip 6860, 6890 for long entries, regime appropriate. And when we look at ARK, consolidation around 78 to 80, adding on positions. Amazon rally to 222 to 25 for short add-ons. I'll be posting updates. I will be posting how the trades went as these levels come into play. Before we wrap up, I need to be crystal clear about something. These are real trades with real money at risk. I'm showing you my actual positions, my actual entries, my actual exits. This is not a paper trading channel. This is not what would I do if I traded. This is what I am doing. But it doesn't mean that you should replicate these trades. Your risk tolerance is different than mine. Your account size is different. Your trading experience is different. The goal of this channel is not to give you trade alerts. I will not do that. But it is to teach you methodology so you can identify these setups yourselves. So the institutional terminal that I'm using in all these charts, this is proprietary software I developed specifically to read institutional positioning. It's available on TradingView. The link is in the description. I have a free version and I have a paid version. But more importantly, I publish a daily newsletter on Substack where I provide these exact analysis every single morning before the market opens. Specific entry levels, targets, risk zones, risk management parameters. Everything you need to trade alongside institutional flow. I don't give you a fish. I teach you how to fish. But I also show you where I am fishing and what bait I'm using. The link is in the description. First 7 days are free, so you can see if the methodology resonates with your trading style. If this video helped you understand the market structure better, hit the subscribe button. I'm posting 2 to 3 videos a week, breaking down real-time market analysis using volume structure. Drop a comment below. What is your biggest takeaway from today's analysis? Are you watching any of these same setups? And if you want the terminal indicator yourself, link is in the description. Trade the regime, follow volume, and respect the levels. I'll see you in the next one. See you and trade safe. Bye bye.